let's get in Rahul Jain, who's Director Research at Dolat Capital, to talk about this and more. Rahul, thanks so much for joining in. Much appreciate you taking the time out. Good morning to you. What is your verdict? Because when I read the note from Dolat Capital, it seemed that you guys haven't taken very kindly to the numbers or the commentary from the management.
Yeah, I mean, if you look at the BSNL part, which you also highlighted some time back, was slightly known and was expected to go down. But what was more worrying was basically the international business, which also saw a QQ decline after a weaker Q4 as well. And there is no meaningful confidence coming out in terms of why Q2 or the second half of the business could revive pretty sharply, because all the deal TCV wins are not ramping up to the expectation of the run rate that the analyst community is building. So with that kind of a question, we are thinking that this is going to be a weaker year, another weaker year, and losing confidence on current year performance is where we think the current small up move that has happened in the last 2.5 months looks slightly unjustified, and that's how we have a reduced call right now.
Rahul, hi, good morning. What in your mind is the most concerning factor? Is it the BSNL ramp down? Because if you look at it broadly speaking, the outlook on deal pipeline, etc., there's no clarity coming there as well. What to you is the primary concern?
Yeah, some of the concerning aspect where, like if you look at the vertical segment, barring one or two segment, most verticals are down on a sequential basis. So even if there are two or three vertical which are consistently growing, that adds to a comfort that, okay, there is challenges, it's only one or two vertical and which could be recouped over time. So a very broader vertical specific impact across many vertical is something which is not giving us, some kind of a confidence and slight disappointment. And also to your pipeline question, I think if you look at the trailing 12-month TCV, even at $40 billion is like 1% down on a YOY basis, which reflects the kind of a growth the company might do this year. So unless and until we see it going back to $10-12 billion mark, I don't think even the deal TCV win is going to excite us in terms of a sustainable, stronger mid to high single digit growth in FY27. But FY26 with -1% TTM TCV does not add any meaningful confidence either.
Right. Rahul, good morning. Hiral here. Overall, if you have to talk, we've spoken about the order pipeline, but the key concern over here is the deal closures. The clients are deferring projects and they're looking for trade clarity as well. Now, manufacturing as a segment was the only one which delivered this time around, and that probably will weaken from here on as well, taking into consideration the tariff concerns. With this, you have to add the other part of the story is with regards to employee attrition, which is rising. Your wage costs probably could inch higher as well if the bench is created due to supply side issues. And the wage hike timeline is not decided yet, but the employee engagement is to step attrition. How would you tie both of these together and the immediate impact that you're seeing not only for a TCS, but with the other companies that will follow?
Yeah, so firstly, on the TCS part of the question which you asked, I think everything is linked to growth. If you find growth in the second half of the year, then you are able to justify the current set of workforce and at the same time honor all your commitment on the hiring side and also eventually on the wage hike side of it. What we have seen in the past is that these companies have become far more resilient when it comes to do margin management, and that's why we are seeing wage deferment nowadays very common aspect to do a margin management in a weak growth scenario. So if they are eventually able to see a much better traction going into the second half, they might announce the wage hike, and some of the supply side challenges could get constrained to that extent. And we are not worried at this kind of attrition. The much bigger worry is on the demand side. Supply side overall market is pretty open, so that way we don't see any risk on that part of the business. From your read across kind of a question, I would say that the opinion in terms of commentary and performance was slightly mixed in the previous quarter as well. So there is a decent possibility that some other players might not report as bad as number as what we have seen here. And that's why the divergence in performance may continue going into
What,
next
Rahul,
quarter.
what is the call on TCS this morning? Is it a buy, sell or a hold? Basis
So for
numbers.
the current price, I think, is adequately capturing what they might deliver over the next few quarters. So that way, we would say there could be some moderation from current level that could happen.
It's a sell at the current levels after the numbers?
So the way we have our reporting or the rating structure is that we call it reduce, which is less than 10%.
Okay. All right. Thank you so much for that.